Hi friends, in this video we will take a look at what is going on in the economy right now and what is going on in the world of investing right now. I haven't done many macro videos because I think your focus as an investor should be much more in the micro level, on the company level. But now I wanted to make an exception because I just personally find many interesting things happening around the world when it comes to economy and investing. And in this video I have pretty much gathered some random graphs, or not that random, but graphs that I find interesting, points of information that I find interesting, and yeah, I just wanted to present them to you now. So treat this video very much as an entertainment because I have no clue where stocks are going next. I don't have any clue where the economy is going next, but let's have a look how we have arrived to this point we are right now. So fasten your seatbelts and let's go. So friends, we begin with Data Roma's data on what the super investors of Data Roma have purchased last quarter, meaning the Q3 of 2023. As you can see, we have pretty big tech companies, what you would expect, buying. Apparently super investors are pretty much going with the broader market, what is trending, what is hot right now. And you can see the top meta platforms, Alphabet, Google by its other name, Amazon, leading the way, being the biggest buys last quarter. Walt Disney, company from my watch list, definitely. I always hoped Disney would dip to $70 per share. That would have been my strike price to buy Disney, but it never went that low, stayed above it, and many super investors seem like they are thinking that Disney was undervalued where it was 90, 80, and they have been buying Disney. So kind of sad because of that. I think Disney is a great company and I would have loved to bought it myself, but not yet. Let's see what the future holds. We have Microsoft there next. Again, big tech company, so no surprise kind of to see it on the list. Then United Health Group, don't know much about it. Thermo Fisher Scientific, no idea. Haven't looked into the company. Dollar General, I know this was pretty hyped up buy since their stock price I think declined by a huge number recently. So super investors seem to see Dollar General as interesting stock to buy. And then we have again Apple and Alphabet. So what we can say from last quarter super investor buys is that they are betting heavily still on the big tech, and it feels weird saying it, but I am a little bit disagreeing with them. I think big tech can be fairly valued. It surely can be, which because they are great companies, they would be also great buys when they are fairly valued, in my opinion. But my view is that they are fairly valued or overvalued, and I'm not buying overvalued companies to my portfolio. Used to have Meta and Alphabet in my portfolio. I think out of all the big tech, Alphabet is most reasonably priced at the moment. I don't have valuations, anything else except on Alphabet. I have Alphabet, Meta and Microsoft on my watch list. Microsoft I feel is pretty hugely overvalued. Meta also nowadays. But if I would need to buy one big tech, that would probably be Alphabet according to my valuations. Then, when we look at how the things change, if we look at two last quarters, well, we still have Amazon, Meta, Microsoft, Alphabet, Disney, United Health Group, Alphabet, Thermo Fisher. Basically the same companies super investors have been mostly buying during the two recent quarters. Then you have JP Morgan Chase and Visa cracking to the top 10 there. But yeah, basically it's big tech ruling for the last two quarters for super investors. This is what we can say. Visa and JP Morgan Chase, I don't do banks myself, so no comment on that. We move to what Warren Buffett's Berkshire Hathaway has done. And as we can see, or what I wanted to show you from this graph basically, is that when you look at the percentage change to portfolio, how much these buys and sells, you can see on the screen affected Berkshire Hathaway's portfolio. You can see that there is lots more selling than buying going on in Berkshire Hathaway's portfolio, Berkshire always has lots of cash. Now it just hit a new record again, but basically they hit every record pretty often, but with their cash position. But what we can say from here is that Warren Buffett is having cash and cash equivalents very much. He is not finding many buys on the market now. I think he feels that the market is overvalued at the moment. This is the story I see in this picture myself, and have to say I kind of agree with Buffett myself. Of course, Buffett cannot buy small companies too much. I think he has some sort of limitations from Berkshire Hathaway's side on that one. So it is more difficult to find buy targets for Warren Buffett than it is for me. But nevertheless, when we talk about broader S&P 500, I think Warren Buffett would say that it's overvalued according to him at the moment, and I must say I would agree. Then we move on to the top 10 holdings of all super investors at Data Roma, and no surprise there, we have Microsoft, we have the great Berkshire Hathaway, Alphabet, Meta, Alphabet, Amazon, Berkshire Hathaway, and then some bank stocks, Visa, Bank of America, MasterCard. These are the most owned companies by the super investors, obviously. As I said, I don't know anything about banks or Visa, so not commenting on them, but when you look at Berkshire, Amazon, Alphabet, Meta, Microsoft, these are the best companies of the world. Nothing more to add there. I would love to own these again in my portfolio. Meta and, as I said, Meta and Alphabet I had, but simply overvalued in my opinion, or at least not undervalued, let's say so. So that's why they are not in my portfolio. Should there be a panic in the market, Corona part 2 or something similar happening like COVID, hopefully not going to happen, but unfortunately in the world it takes 5 to 10 years and something big always happens that puts everybody in panic, and I think this kind of panic situation is what is required now for me to become an owner of these companies next. And when that happens, I just hope I have enough cash position to actually buy big these companies, because as I said, these are the best companies of the world in my opinion. And we move on to now trading economics data, and first I want to start off with biggest position in my portfolio now, which is uranium, and there you can see how the price has developed from 2019 until this day. And yep, I think I started buying, when was it when I started buying uranium for the first time? I think it was the end of 2021 when I started buying myself, and the price has gone up. Uranium, I still believe it will go up from here, so I'm not selling at the moment any of my uranium. I have Sprott Physical Uranium Trust, and then I have Global X Uranium ETF in my portfolio. I think I know that I'm kind of thinking myself, will I start my selling program? Because this is something I will do myself personally. I will not sell my whole uranium position. I will start slashing it down. I haven't decided will I start in $80 or $100. That is yet for me to decide. I'm leaning towards holding until uranium is $100 before I start selling myself, because well, you need to research uranium sector yourself. For example, you can begin by looking at my videos on uranium from Arctic Money channel, but it's as every investment is risky, so is uranium, and you need to see if uranium is something for you. But it was something for me, and it has been this year, 2023, as you can see. Uranium, I think I just saw data where uranium has beaten Nasdaq, has beaten S&P 500, has beaten semiconductor index, has beaten some AI ETF. So uranium has been one of the best investments in 2023 anybody could have made, and I am really happy, of course, because of my portfolio. This has grown from my third biggest holding since last year to my biggest now, uranium, and yeah, let's see how it goes, but sometimes it's nice to see something in your portfolio to go up for sure. And next one we have to take, obviously, look at Brent crude oil. The oil price, as we know, has hit the down low when the COVID panic started, went really down, went even negative for one day, I remember. But since then we have climbed a lots up. Geopolitics obviously affecting the price. You can see, I think we could see here the jump that Russia's unlawful war against Ukraine created somewhere in 2021 and 2022 obviously probably is there the first spike. Since then we have come down. Recently the Israel-Hamas war has created I think a little spike there, but surprisingly little. According to some expert I heard that everybody were expecting bigger bigger oil prices. But so far we haven't seen that, and I don't know if you can take some conclusions from there that investors don't believe that the Israel-Hamas conflict will broaden in the Middle East. Obviously, what was it? What did I learn? What did I hear? Was it 1/3 of oil in the world is coming from Middle East? So obviously, if the conflict broadens there, that will spike up the oil prices. So far, if you can say that commodities can predict the future, or at least they try predict the future. So far, I think oil price is not showing that anybody expects the conflict to broaden. So I don't know. We unfortunately need to see, but this is kind of the story we can see from oil. I think, as I said, I'm not a macro expert. Predicting of oil prices is pretty much impossible task. So this is just entertainment and what I see in these graphs. So keep that in mind as we go forward now to Dr. Copper. And why I call it Dr. Copper is that copper prices are usually the fortune teller of the future. Are we going into a recession, or are we going to have boom in the economy? And surely we all know how all asset prices were inflated in the post-corona world. Since they have come down, and so has copper. As you can see, this pretty much could look like any index in the stock market index pretty much in the world, I think, these copper prices. But yeah, as you can see, since the little as for example S&P 500 is almost hitting new highs, all-time highs already, copper is not. It went up along with the broader market and has since started declining again. Like we talked about oil, how oil would predict the future. Dr. Copper could also sometimes have been said that could predict the future. What I can see here is that copper has no idea what's going to happen next, is my explanation to this. So investors in copper kind of wait and see, I would say. We are not moving anywhere, not down, not up. But copper as an investment is of interest to me. I owned copper miners when COVID panic started, and that paid me off well. I am looking big panic to happen, copper prices crashing down, and I don't know if we would see like, what could I say here? If the copper price moves to $3, I will take a serious look at copper myself. Probably some copper ETFs, because for copper is used in electrification of the world, so the demand side for copper is huge in the future, most likely. And then it's basically a matter of seeing the supply side. Is the supply big enough to fulfill the demand? And if not, that will mean that the prices will inevitably move up with copper. So cheap copper is something I'm paying attention to. I would say there are two commodities, maybe three, that I pay close attention to. These are uranium, copper, and oil myself. And uranium is the most interesting one now for me. But copper, if we have a panic crash, copper becomes interesting to me. And then we move on, and we have commodity. Everybody follows, of course, every week. Orange juice. Yeah, I don't think many of you, my viewers or me, pay much attention to orange juice, but yeah, when you look at the price of orange juice hitting 100 in 2020, hitting 400 right now, yeah, try finding a better commodity, better investment than orange juice during the recent years. I challenge you to find a better investment than investing in orange juice. I don't know how that's possible. I'm not advising anybody to buy their houses full of 1 liter packs of orange juice. Probably don't do that. But I guess there are some financial instruments you can invest in orange juice. And to be honest, I haven't looked into what has caused this, but since I know that orange juice is not trending in the world and there is not a boom for drinking orange juice going on at the moment, my guess is that this is because of the supply side, and there has been bad harvests of oranges globally, which I think could have caused this. That's my prediction. I haven't looked into what is the explanation. If you know it, please write it down in the comments below, but I think this has something to do with supply being very thin and harvests of oranges being really bad. But yeah, amazing stuff to see something like orange juice hitting here in what, 3-4 years. It's a 4x. So that was so fun. I needed to show you this. Let's move on from orange juice and have a look at, of course, we take a look at S&P 500, the most common, most watched index of the world, 500 biggest companies of the United States. As I already said in this video, hitting almost new all-time highs. Magnificent 7. You have there Tesla, Nvidia, Meta, Alphabet, Google, Amazon, Microsoft. Who did I forget? Well, you know the Magnificent 7, those companies. And if I forgot somebody, apologies. But those are the companies which have seen big stock market. Their stock price is going up hugely, and they have dragged the Standard & Poor's 500 index to pretty much all-time highs. Is this sustainable? It can be. I already told you that. I think the Magnificent 7, or at least most of it, is in the best case fairly valued, most likely overvalued is what I say. So if you would have held a gun against to my head and asked me where are we going next, I say we are going down, or we are going to fluctuate on the same level with S&P 500 index for quite a few years to come. That would be my absolutely no scientific bet on where will Standard & Poor's 500 go next. I have no idea where it goes next. I'm just saying that what I see, I think S&P 500 is at the best case fairly valued, most likely overvalued. And we move on to Finland stock market, Helsinki stock market. Obviously, I wanted to show you this. I am from Finland, from Helsinki, my home country. Surely many of you international viewers are not too interested in the Finnish stock market, but what I wanted to show you with this graph compared to the last one, Standard & Poor's 500 hitting all-time highs almost, well, it is not the same story all around the world. In Finland, we are at the levels of the COVID crash. We are below what the stock market was the day before Corona panic started. So it has been rough 2 years for Finnish investors. Just wanted to highlight everyone that not all the indexes of the world look the same. Finnish stock market is very much weighted in cyclical industries, and they are dragging the stock market down. So it really does matter whether you invest in which parts of the world you invest, in what asset classes do you invest, and everybody doesn't go up at the same time, even in the index level. Standard & Poor's 500 is booming, Finland is not. Let's move on. And we also want to take a look at the Euro area stock market index, Euronext 100 biggest companies of Europe, and hitting all-time highs, pretty much like S&P 500. Quite similar story there. Surprisingly similar to me, actually, that it has rebounded as much as S&P 500. I wouldn't have guessed that, but okay. Well, that's the story of Euro area. Let's move on to the third biggest index exchange of the world, Shanghai Stock Exchange Composite, so China index. And as you can see, we had the boom before 2016 of Chinese stocks, and it has been just zero returns since. Obviously, with China, you have geopolitical aspects weighing down the index, and no returns due to geopolitical tensions. That's the story of China index investing at the moment. President Xi Jinping just met with Joe Biden in San Francisco. No big breakthroughs between the relations of the two countries, apparently. World is geopolitically in quite a tricky place, and we see where this goes next. Of course, China is a huge market. China and USA are the biggest players of the world. There are probably, if the worst things one can imagine don't happen, if there are no additional wars starting, for example, in Taiwan, and things move to better direction, I can almost say that in my portfolio I have Alibaba, obviously, as you probably know. Alibaba as a company, if that would be a US company, it's hugely undervalued at the moment, and I mean hugely undervalued. If there would be change in the current direction of China-USA relationships and move surprisingly to a more peaceful world with less conflict on many levels, I think China would boom, obviously. Because of that, I can see that in Alibaba's valuation. It's dirt cheap. If the worst things don't happen, obviously, if the worst things happen, Alibaba might go to zero. That is the risk in investing in Alibaba. But if the worst things doesn't happen and the world moves to a better place in these geopolitical relationships, if that does happen, Alibaba is hugely undervalued as a company. It's a great company. That's problems when we talk about the stock price are purely geopolitical, I would say. So that's the story of China index since 2016, not going anywhere. And we move on to my favorite asset class, Bitcoin. Obviously, I have never invested in crypto. Most likely I never will. Never say never, but I don't understand Bitcoin. I don't understand cryptos. I don't think they solve any problems in the world per se. I don't know what problem they are solving in the world. Now, I know if you are a crypto investor, you will disagree with me, but you cannot pay anything for Bitcoins or other cryptos, to say the least. There's no use in owning them. I cannot use them. You cannot buy anything with them. Now somebody will say, yes, but you will in the future. Well, when is the future? I think many of crypto investors have been saying that for quite a long time. Obviously, governments can make Bitcoin illegal at any time, and that would be the end of Bitcoin. I'm not sure if all crypto investors understand that it basically, if Federal Reserve, or I don't know who is the body in the United States that can do the decision that just ban Bitcoin, well, guess what would happen to your Bitcoin and cryptos? Guess what will happen to this price then? It will most likely crash pretty big time. So yeah, that's about me and my views on cryptos. Don't start hating on me because I'm harsh on cryptos. Maybe I just don't understand them, but I don't. And I understand many things better in the world than Bitcoin and crypto, so I'm not going to spend my time trying to learn them, because I think I have better asset classes to try to learn, let's say so. But when we look at Bitcoin here, obviously you have Bitcoin was one of the big booming stuff when all the Corona craziness was going on. Then it crashed from over 60,000 to under 20,000, has since rebounded almost to 40,000. But yeah, Bitcoin pretty much follows the tech stocks. I have shown you graphs before in my channel. Take a look at Bitcoin and take a look at the hyped up tech stocks. They move to the same direction. That's what I wanted to say about this Bitcoin price chart mainly. They are a speculative asset class. Moving on. Interest rates, a hot topic obviously. Pretty much since the global financial crisis of 2008, zero interest rates for many years. Fed tried to lift up the interest rates before Corona crisis, and as you can see, already before Corona even happened, decided that they cannot lift interest rates anymore, and they came back down from above 2% to under 2%. And once the corona crisis started globally, then we went back again to zero interest rates. Then all investors know we have had huge move upwards in interest rates. This is obviously United States interest rates here in the picture, and we have moved from 0 to almost 6% in no time. Everybody are waiting for the world to start burning because of this and bankruptcies and all the financial stress starting, but so far hasn't happened. But I guess we haven't seen the last acts of this play yet. These higher interest rates will have effects, and my feeling is that we haven't seen them yet. And by effects, I mean obviously unemployment and bankruptcies, which actually we are going to look right now. First, we start with unemployment in the United States. As you can see, almost they're under 4%, pretty much record low. You can see the corona spike there, where that was quickly behind us, went up pretty fast and went down even more fast. But now unemployment in the United States pretty much non-existent. No stress in the financial system when you talk about unemployment. And it's not so surprising that when a financial crisis starts, you see unemployment spike up. Now we are not seeing it. Will we see it? I'm afraid we will see it soon. Moving up, we could have, let's now take a look at the bankruptcies here quickly. This is surprising when I looked at this graph. When you see, obviously you see 2008 global financial crisis spiking up, huge number of bankruptcies then. Since then the number has declined with declining interest rates. Obviously that has played its part here. And when we look at the time after 2020, obviously bankruptcies don't happen if governments give out free money to every company. And this is what happened in the United States in the coronavirus panic. If government gives you money, you don't go bankrupt. As you can see, when Corona started and right after Corona, the level of bankruptcies was non-existent almost. Since then, we have seen a small spike up now because of interest rates going up. I am very eager to see and fascinated to see what happens to the bankruptcies next year. Where will this line go next? You see the move upwards. I'm afraid as unemployment goes up, so goes bankruptcies, and they are linked together obviously. I'm afraid that will happen to companies, zombie companies that are not able to sustain themselves. And of course bankruptcies and unemployment are terrible things for people. That creates tragedy in people's lives. I get that, but at the same time I think many should remember that bankruptcies are necessary evil in the world, because if you don't have bankruptcies, you don't have bad companies dying. And if bad companies don't die, they stay as zombie companies. There is no room for new and better businesses to start flowering and replace these bad companies. So what I want to say is that bankruptcies are a natural part of the world economy. It is painful when it happens, but every time a bad company dies, there most likely will be a more stronger company taking its place. So bankruptcies just are part of life of economy, life of investing. That's what I wanted to highlight. Then we take a look at the debt to GDP, United States gross federal debt to GDP since 2000. And this means obviously that how much debt does United States have. And as you can see, starting from 2000 almost, we have been going up in percentages by a big time, from 55% to 129 where we are now. That's a huge move upwards. Obviously, when looking at this, my first feeling, as I am not an economist, I'm not a macro expert myself, but first feeling looking at this graph is that, well, this is not sustainable. This cannot be sustained, and United States is taking more debt all the time. Debt level is just increasing and increasing, and at some points that will obviously create you trouble. And I have no idea where the level of trouble starts, but this is not healthy, and I think I think this cannot go on forever. So what happens with this one, we will see. Then we take a look at continuing in the debt topic. Here is euro area households debt to income, so people's households debt to their income level, and actually quite surprising to see, well, not quite surprising, we obviously see that there was lots of debt during the time of the global financial crisis. The debt level probably won't decline when you have zero interest rates either, so that's why the level has always stayed pretty high until this day. But yeah, when people have this much debt to their income and they have only seen 0% interest rates mainly, and now the interest rates are not 0%, this could create financial stress for some individuals for sure, I can imagine, because if you get used to zero interest rates and then the interest rates move pretty much up as they have done, same as with companies going bankrupt, unfortunately there are people who have taken too much debt, and that will cause bad things, obviously financial distress. So we will see what happens with the households either. Obviously if you lose your employment and you have lots of debt, that's a terrible situation to be at. Everybody knows that, I think. Then moving on. And finally, the last graph I wanted to show you is United States asylum applications. So how many asylum seekers are coming to the United States. The data here starts from 2013. And as you can see, the trend is hugely up. The drop after 2020 obviously is because of, was it now Title 42 that prevented or enabled United States to turn asylum seekers at the southern border immediately away because of COVID crisis. Donald Trump's office started that one, and Joe Biden's office continued that law. But since then, as COVID is now behind us, you can see that the number of asylum applications only jumped back up to the highest level it has ever been in 2022, and the trend line here is pretty clear. There is all the time more asylum seekers entering United States and looking for asylum, and obviously they are not Canadian who are entering United States. These are from the southern border and from South America. Why did I want to end up with this one is that I have in my portfolio Geo Group and Core Civic, two private present operators operating at the southern border, private sector. They are offering private sector solutions to this unfortunate thing. I do not understand that these are people looking for a better life for themselves, and there's nothing wrong in that. It's a tragedy that is happening there, but still entering into a sovereign country without correct papers, that is a crime when you enter illegally to another country, and if you commit a crime you need to be detained. This is the unfortunate fact, and I think Core Civic and Geo Group, even though Democrats wanted to end private present operators, they haven't ended them. They have a service that is very unfortunate and tragic, but they are, I feel, needed companies to solve this crisis, and they might sound to many people as really cold places to invest in your money, but I have to say I'm pretty encouraged by Geo Group's recent. They have a subsidiary that is making these kind of smart watches that can be put to the wrist of asylum seekers, and instead of detaining them and putting these asylum seekers in fact into jails, they can stay free and move freely in United States area, and they are being tracked with their smart watches in their wrist, which is, in my opinion, I think in everybody's opinion, much more humane way to treat asylum seekers than to simply lock them up in jails. So this kind of service is Geo Group, one company I'm owning, offering. I feel that's a great thing. the matter of the fact, as I said, is that you cannot enter a country illegally. That's a crime, and you need to be, when you do a crime, you need to be detained. And these people, if they don't, surely many of them don't pose threat to anyone. Monitoring their whereabouts with smart watches is much more humane than locking them up in jails. Let's see if United States legislators see that GO Group, for example, has a solution to this very real problem happening in the southern border of United States. And why did I want to basically end with this one is that this week my country Finland is seeing similar problems as United States when Russia is weaponizing asylum seekers and has brought them to Finnish borders this week, and the problem is ongoing in Finland. So this comes really close, this issue, to also me and Finnish people, because now even though there might be not, in the case of United States, there's not a bad actor behind these migrant flows to United States. In Finland's case there is, and that bad actor is Russia, who is weaponizing immigrants, which is a despicable and a bad and so unmoral thing to do, but hey, that's Russia, you know Russia. And this kind of, I understand the problem is in Finland. The problem is obviously also in the southern Europe with Italy, for example, and Spain, where there are also asylum seekers entering the country illegally or trying to enter. These are the types of problems we live in today's world, and United States, EU needs to tackle these problems somehow. It doesn't help to try not to talk about these things that these doesn't exist. These are big problems, and in the case of EU and Finland, there is a bad actor, Russia, causing this one. And I have to say I'm happy how Finnish government at the moment is addressing the issue already and really intervening in the beginning that this kind of thing cannot happen. It's not right for anyone to happen. So when you think about investing, you think about these kinds of phenomena in the world, and here you have one, which is migrant flows around the world in southern border in the United States, southern border of EU, and now unfortunately eastern border with Russia, creating this similar kind of issue. So very, very hot topic in the news in all around the world, I guess, in United States, in southern Europe, in Finland, also in the Baltic states, south from Finland, and kind of relates to investing, so that these are problems that somebody needs to take care of, and private sector can help in this one. In the case of GEO, for example, in the United States. So I just wanted to end with this one and say that investing ideas can sometimes come from these bigger macro things happening around the world. Most of these things, unfortunately, are not nice things, but they are the real world we live in. It's sad, but so it is. So kind of on this sad note, let's end this video, and I hope and I promise some next video coming up will be more upbeat and more happy than this ending of this video. Let me know what you think about this kind of freestyling macro exercise I did with you, which I usually don't do at Arctic Money. And let me know if you want to see these kind of videos also in the future, and I could do them. Actually, this kind of macro exercise, doing this one was pretty eye-opening and reminding you how the world is at the moment. So yeah, it was kind of fun. Let me know what you think. Subscribe to the channel if you like stock market investing and economic world overall. And with that, I see you in the next video. Bye bye.